what's going on, traders? Todd here. It's gonna do another free video update. Why not? Hope you're well. Kind of a lot's happened since we last spoke. So I want to talk about a few positions that are going on. There's so much at all-time highs right now. Like, the market's ripping, and I think it's been this kind of environment, and it's an increasingly kind of environment where you have to be okay sort of throwing caution into the wind, not waiting for pullbacks in the ideal entry, and almost chasing. You know, at some point, you're going to chase right into a brick wall, but you can't be afraid to buy highs and you know, embrace the momentum. And we're having that. So 3 things we're going to talk about tonight. Bitcoin, positions we have, outlook, Spotify just reported earnings, and I just saw Kava come through, so I'm going to do an audible and talk about that real quick. So Bitcoin, let's do that first. Okay. So Bitcoin iShares. Okay, so I'm going to show you the underlying Bitcoin chart, where I think we're going as we're approaching the 100,000 mark. We hold Bitcoin ETF IBIT in our wealth management portfolio. Okay, so I'm coming at you from 2 different businesses. I run a research business and I run a wealth management business. So tradinganalysis.com is the research, and Inside Edge Capital is the wealth management business, which is an active management, financial planning, RIA. Okay, so we hold all individual equities. I'm going to show you a few. Now, I'm going to show you a few winning trades. We also have losing trades, okay? And I take pride in those losers. I love to cut losers, generate some capital losses that we can offset against capital gains. So, you know, it took me a long time to say, okay, you know, I'm going to put on losing trades and be okay with it. Now, I'm not only okay with it, provided you follow your process, but when you can use those losses that were properly executed and all your I's were dotted and T's were crossed to create capital losses that offset, then, you know, that's fine, especially as we're getting towards the end of the year here. Okay, so let's get into it. All right, so here's IBIT. The way we're seeing it is we're in wave 3. Now, I originally put IBIT back, I put it back on here in June of 2024, which is about $36. I added to the position last Friday, so that was going to be the 7th, no, the 8th. Right after the election, and here's where we are. So I started with a 2% position in our growth portfolio at Inside Edge, added 1%, now we're carrying a 3%, and where do we go from here? Okay, so you always want to track and do the technicals on the underlying. You don't want to do it on the derivative or the ETF, right? All the volume and the focus goes into the underlying, so you want to look at Bitcoin Cash, okay? So how much further do we have to go? Well, here's Bitcoin Weekly, and I see the 5-wave Elliott move starting from November of 22, up in 1, nice little 3-wave setback in wave 2 in September of 23, big old wave 3 move up to June of 24, and then there's been a lot of chop and slop this year. That was wave 4, and now I think we're moving up in wave 5. Okay, so off of the weekly, let's get down. You know what? Let me show you one small degree. Okay, just to kind of fill in one small degree of trend. Pull you over, and then let me go to the daily. Okay, and we're going to focus inside the 2024 price action in Bitcoin. All right, so Bitcoin, it'll take a second to load here. Here's what I think, and it's been a mess, okay? As spectacular as this breakout's been post-election, the move has been, the market's been really, really choppy from March of 24 until just last week. And this is the best count that I have: truncated 5 of 3, WXY, chop, chop. And then the new uptrend started in September, up in 1, down in 2, and here we are moving higher in red 3. All right, so typical FIB projections for wave 3, I'm moving them back and forth. So the 1618 is color-coded green. That's the ideal. 200% is sort of extended, and 2618 at 109,000 is really extended. The reason I think we may continue higher is something I'll explain in a second. But you see all this glob of fib up here. I have that sort of ovaled off here. This was my target as we embarked on the breakout. So that was at about 82,000 to 100,000. So we're now entering the zone. The deal is, though, within each of your trend waves of an Elliott wave, an emotive wave, 1, 3, and 5, they need to break down into 5 smaller waves, okay? And as you move to smaller time frames, that's going to help you get context as to where you are and how mature or immature the trend may be. So each of your motive waves, 1, 3, and 5, as I'm drawing you here, need to break down into 5 smaller waves, right? So, if we're in red 3, do we have 5 smaller waves? And I'm going to show you that we don't. We have blue 1, 2. Looks like we may be coming into blue 3, which means we need blue 4 and then blue 5 of 3. So we probably get to 100,000. So it's like when you go to the mall, the you are here map is like right here. Before we get on 4, up in 5. Okay. So, we could even go one smaller time frame, go down to like a 3 hour. So here's the red 3 that I showed you. I'm thinking, as I bring in one small degree of trend, that wave 2 is a running flat. If you don't know Elliott wave, that's okay, but it's a 3-wave correction. You could study it and learn it in an hour. And I'm wondering if we're getting a little bit of pullback in wave 4 in this highlighted typical 4v2, 4-3 zone. Now, we went down to about 85,000, and I had depths of about 83,000. So we got close to it, but you look at the size of this wave 2 correction, if my count is right, we probably need to chop it up here for a couple weeks before we make the final blue 5 of red 3 into the 100,000. And, if I'm wrong, which is very possible, here's what I probably have to do. And Elliott's not perfect. Nothing is. If you have a perfect methodology of technical analysis, certainly let me know. I'll pay you a lot of money. If we just make new highs tonight, this is probably what I have to go through. One more push towards 100,000, then into wave 4, then up into blue 5, and so on and so forth. So the point is, embrace the trend. Am I selling the position because I'm up, how much, what percent in, since June, 36 to 50, so up 50% since June and up 15% since last week. Am I selling it? No, I'm just being diligent and cognizant of where resistance levels could come in. And, if they start to sort of match up and they respond to the zones that I'm looking at, I'll act accordingly. But right now, as I said, I'm embracing the momentum and looking to continue to trade in the upside. So that's possible. That's what I'm going to do. I'm going to go back to the original count, which is still calling for a pullback. And if that's the case, 84 to 83 should be it before we regather and go up and finally hit 100,000. Am I going to panic? No, because then we're moving into wave 4, set back again, and then we're going to move up in wave 5 of 5, and that's going to complete an even higher motive wave. And this is not the end of the game. There's probably a lot higher to go. Okay, so that's what I'm doing with Bitcoin, riding the trend. Okay. The other market I want to look at is Spotify. Okay, Spotify just reported earnings, and I'll show you the numbers in a sec here. I just want to show you the technicals to start. So Spotify just last week broke the new all-time highs, and Spotify fended off some of the biggest large cap growth in terms of streaming music. We have Amazon and Apple. And, obviously a smaller one, Pandora, and there's a few others that tried. And Spotify has emerged. There was a report from Mark Mahaney. He said basically, artists trying to break out or trying to get on the Spotify platform, stock's looking awesome. And it's doing amazingly. So from the technical point of view, before we look at the numbers, from the wave count, I'm seeing this as 1. And what's interesting, I posted this on CNBC. This was a 162% gain. And if you're a kind of a fib dork like I am, that's 161.8. It's your golden ratio. So it's 162% gain. We set back. And then another 162% gain was the 100% right here. We hung around for a couple weeks. And then middle of September, we broke out to new highs. Okay. So typically in a wave 3, you should go up to the 1618, which is really weird because the 618 projection of 3v1 is at 616, really close to 618. Like, you can really geek out in this stuff. But, you know, we're at 446 here after earnings, and the next Fib projection's at 616, okay? So a little closer detail on Spotify. This is another one that I hold in the wealth management. So there's a little bit more detail on the Elliott Wave count here. So originally, I first got into Spotify at a, I think it was a 2% position here in February 23. I don't mind showing you. No, it was a 1% position to start. I'll just screenshot and show you right there. Feb 8 of 23. New position. We added, actually, we added Spotify and Meta that day on February 8, 2023. Held it. That was a 1%. I increased it another 1%. February of 24, which is in the middle of wave 3 of 3. This is the big breakout move. So absolutely fine buying strength, adding to strength here, right? Because it's a third of a third. Moved up, chop, chop, and then I added another percent here in the RAA. So if it's in purple, RAA is Registered Investment Advisor. That's my independent wealth management business. So we added 1% February 23, another 1% February 24 a year later, and August 24, we added another percent, and here we are moving higher in 5 of 3. I have a more active portfolio that I trade at Trade Analysis. That's also going to be offered at Inside Edge, Active Ops. We got in at 343 as well. Okay, and again, let me just say it and be balanced, like, guys, I do have losers, I promise. And I cut them when they don't work and happily take the capital loss. So I want to be balanced. I'm saying, do we have all winners? Absolutely not. I have losers, but I cut them. Okay. All right. So where are we in the Spotify game? Well, if we're looking at green 1, green 2, 100% was at 339. That was the chop for most of the summer. Typically, a wave 3, your target is the 1618 on percent distance traveled. So all that means is if you take percent distance traveled, which is 162%, multiply it by 1618, that, you can do that in a calculator if you want, will give you 380 something percent at $616, and we'll look at valuation to see if that makes sense. But first, let's keep geeking out on the technicals. All right, so within each of your impulse waves within a motive trending wave, right? 1, 3, and 5 must break down into 5 smaller waves. So green 3 is here. Do we have 5 smaller waves? Well, the 2 biggest corrections I see are here in October 23 and another one here in June of 24. And it looks like we're trying to work off the remaining red 5. And inside of that, this is the fractal nature of Elliott. And if you don't know what I'm doing, like, it's fine. I'll just tell you. It keeps breaking down into 5-wave moves. So this is the fractal nature, which I think, you know, if 616 is the higher target, you know, do we have it breaking down into a 1, 2, 1, 2, 3, 4, up in 3, pull back in 4, and then go up and start to reach the 600 level? Is that possible? I think it absolutely is. Okay. And let me go show you on the earnings why I think that may be the case. Okay, so bullish on Spotify. Let's go over to deep view. Okay, so if you look at Spotify, so here were the earnings. Actually, let's go over to ticker. Where do we go here? Sorry. Stay with me. Motive wave. Here we go. Okay, so here's the Spotify earnings. Spotify came in, it actually missed on the revs beat at 4.38 billion, estimates of 4.31, but the EPS actually beat quite handily, $1.59 and 184 expectations. And if you read some of the details reported, Q3 after Thursday's closing bell, earnings of $1.59 and missed analyst consensus of $1.84. Company reported monthly average users, MAUs, net additions of 14 million, and this is the key part, surpassing guidance by 1 million. Subscriber net additions of 6 million were also ahead by 1 million. So they beat net addition of subscribers and subscriber beating guidance. Subscriber net addition of 6 million were also one ahead. Premium subscribers grew 12% year over year, 252, reflecting year over year and quarter over quarter growth across all regions. So as it's adding subscribers ahead of expectations, that's really, really good. I'm going to talk about there's a currency headwind that if you were watching OnCloud earnings, they're a Swiss-based company, it's the same deal. But if we look at what this company's doing, Spotify, like if you look at where they've been, right? In Q1 of 24, they made $1.05. In Q2 of 24, $1.43, which is the second consecutive 184% quarter over quarter of the previous year growth. Then up to $1.59, which is $3.41. And we're comping, right? So Q3 of 23 was 36 cents. Q3 of 24 is $1.59, which is a 341% growth. They just beat quarter over quarter by 341% earnings. Like, what? And even from, Q2 to Q3, look at this, Q1 to Q2 to Q3, 105, 143, 149, it's bonkers. Then the expectation for next quarter to go from $1.59 to $2.07, which would be a 630% growth. So you're getting crazy, crazy quarterly growth. And then on the sales side, 3.95, 3.95, 4.1, 4.3, 4.6. And they're increasing their advertising dollars, much like Meta did. They have an advertising portal for small and medium-sized business, much like Meta does. They're using AI. So Spotify is kind of crushing it. And if we go down to the annual numbers down here, EPS, they lost $3 a share in 2023. This year, they're going to make $6.36. Next year, $9.13, then $11.73. So you're going, 315%, 43%, 28%. Like, these numbers almost look like NVIDIA. I mean, not quite crazy as NVIDIA, but crazy. Top line, year-over-year growth, 8%, 16, 18, 15, 13. I mean, just absolutely bonkers, right? So the valuation is not cheap. 65 times forward earnings. I think that's going to be Spotify price $4.18 into $9.13 for 2025. That looks to be about 65 times earnings. Yeah, but stock's grown a couple 100%. Expect to grow 40% year over year going forward. Okay, so it's an $82.3 billion market cap company. We looked at the PE. And you look at some of these numbers, EPS growth and surprise. We didn't even talk about surprise. Surprise this quarter was slightly lower. Okay, 9% below. Surprise 2 quarters ago was 24%. Surprise 3 quarters ago, 57%. And I think, one of the things that's working against it, and again, I haven't had time to get into it because it's like OnCloud, is the dollar. This company is bringing dollars home and repatriating or changing back into their domestic currency, which is the euro. Well, the dollar since September has been straight bid, so international companies are going to be impacted by that. And again, that's OnCloud and Spotify and obviously others. So OnCloud missed their earnings as well, but the stock was still up. So I think what happens is markets are looking past the short-term dollar strength as a reflection of kind of money flowing into the U.S. as the red wave hit, and a lot of pro-growth deregulatory practices coming in, and maybe it's a touch of inflation expected going forward. We just talked about it with our members, and you look at the inflation break-evens and forwards, there's not that much inflation priced in. I think it's more of a currency market dynamic, which we talked about in the last YouTube video. 19 minutes in, this was supposed to be short. I've got so much to say about this market. All right, I'll have to see you on the next video update. See you guys. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.